Greetings to all and welcome to this presentation on the economic environment of business. We all know that the success and failure of a business depends upon number of factors, and most of these factors may not be within the control of the management. And all these factors put together is what we call as the term environment. So environment is the totality of the factors which may be external or internal to the business. Every business needs to exist and operate within an environment. All decisions are made considering the reactions from the environment. So, the external factors we refer them to as the macro environmental factors, and the internal factors which are within from the company we call it as the microeconomic factors. A definition given by Keith Davis. He defines business environment as the aggregate of all conditions, events, and influences that surround and affect it. So, what are the business environment factors? They are many. Some of them are listed here: economic environment, technological environment, social environment, political environment, and legal environment. In this presentation, we're going to focus and learn in depth about the economic environment. A firm or a business is an economic institution. The success or failure of a business is measured in terms of its profits and losses. So, when we say environment or business environment, it can be classified into economic and non economic environment. So, which are the non economic environmental factors? They are social factors, political factors, legal factors, educational factors, cultural factors that affect business operations. Now, coming on to economic environmental factors, it refers to the fiscal policy of the country, the monetary policy, the industrial policy, the volume of output produced, the price and income levels, the economic system of the country, the level of economic development, the national economic plans and policies. So all these economic factors are referred to as economic environmental factors. So we can classify the economic environment broadly into two categories. One is microeconomic environment and macroeconomic environment. Microeconomic environment have an effect only on an individual company or a consumer level. They don't have an impact on the whole economy or all the businesses which operate in the economy, but they affect only a particular company. So, what are these microeconomic factors? The first one is competitor, the competitors of any business unit. The more the competitors, the lesser the profits. So, competitors have an impact on the profits of a business. The next one is demand. Demand and supply of goods or demand and supply of materials have an impact on the bottom line of the business. Market size. It refers to the total sales made by a company in the year when compared to all other competitors in the industry. Suppliers. The reliability of suppliers producing materials or goods will definitely have an impact on the business. Distribution chain. The availability of distribution chain channels will affect the business in such a way that whether the products and services are able to reach the end consumers on time. Nowadays, we have a modern way of selling through internet. Availability of employees. India is a populated country, but still availability of skilled employees is a challenge. for the business. Availability of investors. Business needs finance. It needs funds. So availability of investors will definitely affect the business operations. Media and community. The perception of media and community will have an impact on business too. The next is the macroeconomic factors. Macroeconomic factors are large scale factors that can affect many different companies which operate in the industry or in the economy. They do not have an impact on a single company but affects the entire economy. So some of the macroeconomic factors are the unemployment rates of a country. Lower unemployment rate indicates that the economy is healthier. Next, inflation. Inflation refers to increase in the cost of goods in an economy over a period of time. If there is rapid inflation, it is a sign of economic instability. Interest rates is the amount of return that money invested can generate. If interest rates are high, it indicates that the currency has a higher value. Taxes. Companies are liable to pay taxes to the government. Any changes in the tax rate has an impact on the business as well as the economy. Exchange rates refer to the value of a currency. If exchange rates fluctuate rapidly, it indicates a weak economy. Customers' discretionary income or disposable income. In other words, extra income. Higher the extra income, greater will be the volume of business. Retail sales, they indicate how much the population of the country is spending as a whole. It's an indicator of economic health. International trade, it is a trade between countries. We'd refer them to as exports and imports. Generally, any country prefers its exports to be greater than its imports. Finally, environmental factors. Environmental disasters or natural disasters or calamities like earthquakes, floods, and droughts. They affect business and industries. They have an impact on the volume of sales, volume of production, and on the profits made by the business in that particular year. Hence, we can conclude that we need to constantly evaluate our business environment. Environmental factors are many and they are in various forms. Some of the factors are static, while most of the factors are dynamic and they are changing. They vary from country to country and differ from time to time within a country. So, economic planning becomes important. Business environment affects the critical elements of business management, such as planning, organizing, directing, leading, control, and coordination. So, good amount of managerial skills or effective management is required to adjust with the environmental changes. Thank you.